Hi, welcome to this video update, which is on the 26th of March. We're on Saturday. In today's video, we're going to be looking at some euro pairs and also a couple of euro correlated currencies against the USD. Now, in terms of the trade setups I want to look at today, they are going to be euro USD, euro JPY, euro GBP, and then the USD against the SEK, or US dollar Swedish krona, and USD against CZK, US dollar against Czech krona. We'll go over and look at the trade setups in just a moment. Now, in terms of just before we look at the trade setups, just please always do keep in mind, it is my view as of right now. It can, of course, change in line with market action and conditions. If you want to learn all our trading techniques and check out our daily technical sentiment analysis of 14 FX pairs, including the ones we're going to look at right now, all you need to do is click on the link beneath this video and get live access to our member center and our analysis. Now, in terms of the trade setup, so I've been doing some updates in our member center this weekend, so I'm going to use the charts from there. So let's go and take a look at them. Right, just before we go and look at the pairs and the important levels of support and resistance, I just want to look at a few charts in relation to the sentiment towards the euro and also the big picture of why we are long-term bearish of the euro. Okay, just very quickly, I'm just going to go through a few charts. This is the first one here. It shows net speculative positions in the euro, elevated, the red line, euro USD exchange rate down, speculators long. Okay, this chart is from just over a week ago. The lines have narrowed slightly, but our betting is that the big speculators are going to exit their longs and maybe even turn short. At the moment, they're optimistic about the zone going forward. We do not share that optimism. Just want to show you a few charts in relation to this. This one here comes from Goldman Sachs, okay? And you can see it. They're forecasting a growth rate a while ago, before the Ukraine invasion, of 3.9% for the zone, down to 2.5. Given this downgrade, euro area growth turns negative in Q2, driven by declining GDP in Italy and Spain. That's just as things are right now, but it could get a lot worse. Okay, obviously a big problem for eurozone is their reliance on Russian energy. And this one comes from JP Morgan. They say full interruption of Russia's gas flows lower euro area GDP by 2.2% in 2022. Okay, now in terms of hits on individual countries, Germany's the powerhouse of the zone. Okay, so if we get no further disruptions, they're forecasting a hit of just under 1% for Germany. No Ukraine flows, 1.5% hit. But if the gas is cut off by Russia or the EU decide not to import it anymore, which I think is unlikely, I think Russia might cut it off, then you've got a hit of nearly 3.5%. But yeah, even if we don't get the worst eventuality, high gas prices are here to stay for Eurozone, and they can't replace Russian gas quickly. This comes from the EU Commission about how they're going to try and do it for the winter. Okay, here the gas imports, I mean, at best they're going to get to about 2/3. I think this is optimistic, actually. So yeah, real problems obviously with energy. Here's another chart, which is a good one. Obviously the zone is facing higher costs in terms of defense, the light blue bit of the bar chart. Energy we've just discussed, which is obviously the biggest bit. But yeah, people are getting refugees. That's expensive as well. Okay, so you've got declining growth, increased burden on nations in the zone, inflation roaring, commodities, not just energy, going up. It's no surprise to see euro consumer confidence has dropped 9.9 points in March. That's almost as much as when the COVID-19 pandemic shut down the zone in 2020. It's dire in the zone. And a lot of people are saying the zone will avoid recession. We think there's a high probability of a recession. The idea that the ECB will be raising rates, we think is a little bit optimistic. Now, a lot of people are optimistic that things will get better in the Ukraine. I just don't think so. I just pulled up some headlines this afternoon. Russia reasserts the right to use nuclear weapons. Well, that's not good, is it? Smoke seen rising over western Ukraine city of Lviv. That's right next to the Polish border. You can obviously look at the news yourself. I think this is going to drag on. Okay, even if things die down, the Russian sanctions aren't going, are they? So that means energy costs, which is the real problem in the Eurozone, will remain high, and there's a high probability of a recession. Okay, there's some background, and let's go and have a look at the technical levels to look out for. On our first chart, Euro USD. Anyone new to our analysis, we do not use any complicated technical analysis. We can keep the technicals simple because we've got a bias of which way we're going to go from the sentiment, the big fundamentals behind the chart. Now, in terms of, just before I discuss how you might play this trade, we topped out above 114. Then we come below the green line, which is the 20-day moving average. Nice sell-off, rally, double top, down, then another rally up to the 111 level. You can see it's poking it on these two tails here. This tail poked it as well. That tail nearly got there. Then falling back with the 20-day moving average holding rallies. Okay, now in terms of fairly low volatility at the moment, if you just look at the technicals, yeah, it look pretty boring actually, but I think we're going to get an uptick in volatility. I think upside is limited in the euro, but plenty of downside potential. Now, in terms of, drawn two trend lines in, one just behind the 111 level, which I think is the big level, okay, and then a minor level of resistance here. You could sell back to resistance on weakness, or you could just come in. This is the way I would do it if I wasn't in. Basically come in, keep half in reserve to sell a rally or a break of the 109 level. Okay, why the 109 level? I'm not worried about these two candles here. I'll just show you. Let's go to the monthly chart. Okay, it's this double bodies here. Okay, obviously you've seen tails go through and they reverse back up. This tail obviously has here as well. But I think if we go through again, then that'll be it. The euro has been trending down, and I think we're going to trend all the way down to the 105 level. Okay, so well, we're near enough at 110, so plenty of downside potential. A longer term, if things got really bad, we could get to the par level I've indicated at the top of my screen. So at the minute we're in at 110.60. Yeah, small position. I want to add through 109 or on a rally. Okay, so that's Euro USD. Now let's go and take a look at Euro JPY. We're on Euro JPY. Now in terms of Euro USD, it's moving quite gently at the moment, but not Euro JPY. Had a big move down. We had a good short trade as we came down, and we thought we'd carry on to the downside. Got stopped out, tried to short again, got stopped out, and then she runs on to the upside. So we gave a good portion of our profit back, which is disappointing in hindsight. Should have bought it, but hindsight's a wonderful thing. Now, in terms of the price, I just moved too far too quickly. Speculators are now heavily long of the euro. They're short the yen heavily in a lot of pairs, okay? And we're coming up to a monthly resistance level. The monthly resistance level, I'll show you in a second, is 135. Now, our view is we'll sell 133.70, so through the low, okay, with a stop back behind 135. If we pop higher, though, through 135, I'll sell back through 135, something like 134.80, and then go back behind the next round number, 136.20. I write that on my chart when I do my Monday update, but I just want to show you the monthly chart, because this is monthly resistance at 125. Okay, these candles over here in January, we got a bit above it on the double top there, but yeah, 125 should be a big level. If we have a go at it and go through it, I'd short back through the level. If not, we'll take some weakness through the low, and I think we could get down to the 129 level. Okay, obviously we'll manage the trade as we go, but I'm hoping that we fall back pretty quickly. Then we can bring our stop down. Okay, so we'll see how this one goes. But yeah, very overextended on the upside. Now, in terms next one, Euro GBP from a long-term perspective, I think this looks good. I mean, we're kind of ranging at the moment. Okay, my own view is, well, Eurozone very bearish for us. UK is in much better shape economically. Okay, and the interest rate outlook is better. So as a long-term trade, this one's quite good. We have to look at the monthly chart in a moment. We can see we come up to this 84.50 level, come down, and we get up to it again, come down. The way I would do it, you can see I'm going to do it this way. Sell at 83.20, so I'll sell a break through the support level, new low, stop behind this 84 level. Okay, so 84.20. If we rally up to this level, I'll sell into it. You can see 83.90. Then I'll put the stop back behind the second level resistance. Now, in terms from a long-term perspective, where could we go on the monthly chart? Let's have a look. Euro GBP. We are kind of trending lower in a choppy fashion. I think down towards the 80 level. So over here, basically, where the big blue sliced and we went to the upside. So that I think would be about fair value unless things get dramatically worse in Eurozone. If they do, we could go even lower. But 80, if we get there, would be good. The risk to reward on the trade is pretty decent. But yeah, at the minute it's kind of, sort of going sideways a bit. But I think that's going to end with a big breakdown in the euro. We shall see. Now let's have a look at a couple of euro proxies. Right, on USD, CZK, and regular viewers will know we've been very bullish of this pair for a few months and got a couple of decent trades there. But that was a massive move to the upside. Now, in terms of the move to the upside here, to do with the Russia-Ukraine crisis, obviously Eastern European nations of Europe are very exposed to Ukraine and Russia in terms of trade. The same applies to Poland and Hungary. We like to look at the USD PLN, USD HUF on strength as well. But in terms of, it was a nice long trade. Then we corrected. I thought that correction was enough, so it came in on the blues and then got stopped out. Then we've kind of ranging and we've got a trade in and we're looking to add. Now, in terms of this pair, not just Russia, Ukraine is in the mix in terms of where this one could go. We also have the Czech Central Bank next week, and the market is kind of deciding how much they might raise rates by. There's some forecasters saying 0.5%, others saying a full 1%, consensus 0.75. Now that good news is in the price. I think, will they be really aggressive with a rate hike next week? They could be. But with what's going on in Russia and Ukraine, they might hold off a bit. Or if they do hike, be very kind of, do a dovish hike. We'll have to see. It comes on Thursday. But after the big rally up, you get the correction. Then you got some ranging. Looking for a break of the range. If you want to come this one, it's very simple. You just go above 22.50 if you're a bull. And then see if she runs. Okay. Now, obviously, we've got the central bank coming up. And obviously, you might get, optimism about Russia, Ukraine solving their problems or having a ceasefire. You could break down. If we got to the 22 level, which is a big monthly level, it's where the trend really accelerated off, then we would key off that level for longs. But I'm hoping we don't drop down. I'm hoping that we break through the 22.50 level. We can add to our position. We'll see. Last pair I want to look at is USD SEK. Now, in terms of the Swedish krona, US dollar had a nice move up there. Again, a significant correction. This big red bangs in to the 940 level. You can see we're kind of holding it on a close basis, and the volatility now is pretty low. in terms of coming into this one, it's through the double trend line here I've drawn. If you're a bull at 9.49, okay? Now, you could break to the downside. If it broke to the downside, you key off the 9.20 level. I haven't drawn the level in, but it's a big level also on the monthly chart. Hopefully we'll just break to the upside. That would leave the door open for 10. You got the Riksbank. Market is too optimistic about the central bank hiking rates in our view. So this looks a good risk to reward trade. I think with both the USD CZK and USD SEK, if you do break out, you want to see nice follow through. Okay, if you don't, you can always take the trade back out. But I'm hoping that if the ranges break in both pairs, we see increased volatility to the upside. So they're the pairs. Obviously, a lot can change. You can obviously follow these pairs in our member center if you wish, and also I will update them next week when I'll do a full weekly forecast. So we'll see how they go. But yeah, they look decent risk reward to us. We shall see what happens. That's the video for today. Thanks for watching it.